Hey everyone, welcome to another edition and podcast of Wealth Hour with E.H. Howard. I have a very special guest, my good friend Taylor Webster. We go way back all the way to our college days at Texas Tech, and that's where we first met and built this relationship. But Taylor Webster is originally from Pleasanton, Texas. He's a proud graduate of Texas Tech University, as I've just mentioned. And ever since he graduated, he's been excelling in the real estate industry for over 3 years now. Currently, he is the Chief Investment Officer at Winhill Advisors. Taylor is known for identifying lucrative opportunities and maximizing returns. Taylor is also the co-founder of SmartVest, which is a Texas-based real estate investment firm. SmartVest delivers efficient and profitable solutions for distressed property sellers and investors in the Texas metro markets. He's driven by a deep market understanding and innovative strategies. Taylor, what a wonderful bio introduction, and I know you're off to a wonderful start in your career. How did you kind of get started, and how'd you get here today?
First off, I appreciate you for having me on today. I look forward to diving into some real estate. Got started in real estate basically in college, man. I kind of had a love and desire for real estate just growing up, just seeing buildings, seeing developments kind of come to life. So while I was at Tech, I actually got my real estate license there. So, before I even graduated, had my license for real estate. So right when I got out of college, just had to put my mind to it and figure out what I wanted to do and, kind of figure out the sector. And then from there, I just went and had to go get it.
Yeah, no, that's incredibly ambitious to not only take on the workload of being in college and all the courses and classes that you have at that point, but also to have the ambition and the drive to go get your real estate license during that time. I know we always kind of talked about real estate and investments as a whole and really want to generate wealth. And I think that's really fantastic. And I think that's really cool to see on the real estate development side. Kind of like you said, you love to see how things are built up and how property is created. What has really piqued your interest more so, I guess, on the real estate side? Is it more, residential? Is it more commercial? How do you kind of, what really piques your interest in those different kind of markets?
Yeah, so our main focus is mainly residential and land. Definitely we'll go into the commercial space if needed, one of our investors. But our main focus is single family homes, multifamily and townhomes. Within the land side, we'll look at a lot of undeveloped land, for the communities and stuff like that. And then, infill lots, which is just the vacant lots within the existing developed areas, like your Lennar Homes and DR Hortons. They'll have some access lots sometimes. And so acquiring those for our institutional investors is something we focus on a lot too.
Man, that's awesome. So, would you say, are you doing more of the real estate development, or you're kind of looking at some already established properties? Obviously, in your bio, you deal with some distressed sellers, so you kind of do a little bit of both. But which one do you try to focus on more? Which one do you think is best overall for you and your company and your investors that you serve?
Yeah, no, great question. Kind of both, if I'm being honest with you. We work with a lot of the institutional based clients, so, they might want some land to develop, their next community or something like that, BTR site. Within the pre-existing, single family homes, those are really good as well because, you can find those yields in there, with the distress and, make your returns still, right? So it's all about like the structure of the deal, really. So it's kind of deal by deal. But at the end of the day, really single family homes is probably our bread and butter for sure.
Yeah, yeah, absolutely. And kind of in my business, when it comes to investments and strategies, everything is basically, it depends. And really, what are you trying to achieve? What is your client's goals? How are they trying to get there? What are they comfortable with? And I'm sure that's something that you run into all the time, especially as you have a large product portfolio through different real estate investments and whatnot. But would you say that you really like to do more of a buy and flip, or do you like to do more of the buy and rent, or maybe what have you seen that your investors really seem to like? Is it more of those big sells and gain the cash, or more of the passive income strategies with the renting, especially if you're doing a lot of residential?
Yeah, so like you said, you kind of hit it perfect. It's kind of like each investor, has their niche, right? And, their
Right.
preference, the way I like to look at it, kind of a more simple format is, flipping, you're going to have a higher risk for a short-term return, right? When
Yep.
you go and you buy and you hold, your long-term investments, a lot lower risk, you're building that equity over time. And, it's going to be a long-term investment as well. So, you're going to build more income rather than that just short-term one hit, right? Some people need that, short-term flip, to just keep the cash moving, which, that we do a lot of those just to keep the cash moving and growing, right? Double game. In that long-term investment hold, it's not something that happens overnight, as you know, but,
Right.
term, it always ends up, in the investor's favor for sure.
Yeah, no, I totally get that for sure. And, I'm sure you probably run into a lot of people who have maybe a combination of those things. I talk to some investors every now and again, and some, maybe have transitioned to more of a buy and flip strategy. Sometimes just because maybe they don't always like dealing with tenants, sometimes collecting rent, or maybe someone who's living there doesn't necessarily respect your property the way that they might. So I can certainly see how that's, um, maybe leads people to do more of the buy and flip. But also, like you said, the passive income, you get all the different types of tax deductions, so on and so forth, and the risk associated with buying and flipping, especially with materials and everything, the cost going up. I've talked to a lot of builders just in the San Angelo area, and I can't remember when it was, a couple of years ago, when materials went through the roof, and so all the expenses went through the roof, and it created a rather large issue through the supply chain that a lot of builders and people who did a lot of repairs had to deal with. So I absolutely hear what you mean whenever you say it's a little bit more risky as well. And yeah, yeah, and
No,
holding on to
100%.
that property. Yeah,
Yeah, 100%. The construction cost right now is out the roof. Just concrete itself, crazy. So, um, a lot of people, on the flipping side and construction side, the building side are on a pause, that or,
yeah,
just a different way to kind of keep that investment moving. However, you still have your bigger builders that can, take on that. They're doing quantity, so, they get that cheaper price per square foot. But at the end
right.
of the day, like you said, you're going to have, the way I like to look at it, you flip in, you just have a little bit higher risk. And then the buy and hold, lower risk. It's just what, investor's preference.
Yeah, absolutely. That makes total sense. Um, what would you say that? What is your perception or your take on generational wealth? I think it kind of means something different to everybody, and I love asking people who are in different fields, "Hey, what's your perception of generational wealth?" Because, like I said, everyone has a different point of view, and I think the real estate point of view is a really good one. And I know how you personally feel about it, but I really am looking forward to sharing with our viewers your perception of generational wealth.
Yeah, great question again. Generational wealth is, obviously it's, passing down, financial assets, to, family, your kids, so forth, so forth. Right. And, I think the best way I like to always look at it and, the generational wealth side of it is, like Damon John from Shark Tank. He has a
Okay.
good, quote that he always says. He's like the $3 method, right? Your one is for bills, two is investments, and three is what we want, right? So if it's $3 or $3 million, right? Your first should
Well,
go, after that money, first is bills, right? Your second is an investment, so you can grow that money, and then the third is now that's what we want. But in America, I feel like we get taught so much is oh, we work so hard, right? And we obviously we all work our butts off every day, right? And what is the first thing that we want to do when we, acquire that income? Well, we want to go, keep have a nice dinner, right? Or, go buy nice things, right? But at the end of the day, when you do that, you go straight to three first. You don't even get to number two, and then you're going to number one, and it just corrodes the whole cycle. So I think at the end of the day is just, asset management and, capital management at the end of the day, right? Is, doing the 1, 2, 3 method right is something that I've learned, here previously for sure. But, sticking to that and just, building that wealth actually rather than just spending it on things that we want for short term, pleasure.
yeah, dude, that's fantastic. I'm actually going to have you say that one more time because I'm writing it down, and I just want to make sure I have it correctly. But I haven't heard the $3 or three bill method before, and I enjoyed that. So can you say that one more time for me for
Yeah,
the
most
notes?
definitely. So, Damon John in Shark Tank, he says this a quite a lot, actually. He lives by this. It's the $3 method. It's like, so he says if you make $3 or $3 million, the first is just goes to bills, right? So you need to pay the bills off, right? Everybody has them, right? Your second is an investment. So now you're growing that money, right? You're not losing the money, you're growing it. And now the third is what we want, right? A watch, a car, dinners, nice dinners, stuff like that, right? But in America, that I think it's very, very typical today that, we do it backwards, right? We do three first or what we want. Don't even get to number two to grow our money. And now we're back at one trying to pay the bills off, right? Trying to hustle, hustle, hustle. And it's just a
Yeah.
constant cycle, short-term pleasure with no long-term, returns, right? And so if you stick to the actual method of that, the generational wealth just comes with that.
Yeah, and I love it, dude, because it's so simple, and if you can
Exactly.
break it down just basically on $3, and you see some of the people who are the most successful people in the world, they keep their budgeting and their money allocation simple like that. I can't tell you how many reels and videos I've seen on social media where high net worth individuals are just teaching these principles to their children, and basically they give them, hey, here's $5, but $1's got to go to taxes, and then you got to budget accordingly. But just so you know, like you gotta save at least two or three of those dollars, and then kind of like you said, you have your wants later. And I think that's if you pay for your financial obligations first. Obviously, you pay for your future second, and then you pay for maybe what you want today last. I think that's really hard to get into a lot of trouble. That's just a really sound, wonderful way to think about budgeting as a whole. Like you said, whether it's $3, $3 million, and Dame John, I mean, obviously it's worked out for him pretty well, and I mean, I love that
Obviously.
tidbit. Yeah, so I'm glad I wrote down some notes myself. So that's wonderful right there. What a wonderful nugget. And I would agree. Generational wealth. What is wealth that you can pass down to the next generation and hopefully do so good that maybe your grandchildren or your grandchildren's children get to use it. And oftentimes, a lot of people definitely think in the form of real estate in that degree, especially because it's tangible, so you get to actually look at it, feel it, touch it, use it, whatever you want. Where stocks, it's obviously kind of just something nowadays that you see on a computer screen or your phone, it doesn't seem, it's like there, but it doesn't seem quite as real as land seems to feel for a lot of individuals, and I definitely don't disagree. There's so many different ways that I believe that you can achieve generational wealth, but more than anything, it's hard to pass down any wealth if you don't acquire it, if you don't save it, you don't take care of it, you don't pay your bills on it, and all that wonderful stuff as well. So yeah, wonderful tidbit there, and I totally agree with your definition of generational wealth. You say you deal with a lot of institutional investors. You kind of deal with a lot of different, private money. How do you raise funds for real estate ventures, or how do you find partners for a lot of these real estate deals?
Yeah, so another great question. Another answer I guess I could say is a deal by deal basis, right? Um, a lot of these deals, they're when we do work with the institutional side, they're a hedge fund based model, right? So they're going to have the funds already allocated. So what they
Right.
have to do is just allocate those funds, to keep getting the returns, right? So with those, working on 35 acres actually right now in Mansfield in Dallas, and so that's going to be for a BTR community site right there, right? So with that institutional client itself, they're just going to allocate the capital straight there, right? And so they'll have the capital there. Some fix and flips, right? It's just private money lenders, a lot of private money. Getting a little bit difficult right now in this stage with the interest rates. Just the cost of capital right now is a lot harder to fit in those margins, right, for those returns. And like I said previously, when you're doing those fix and flips, for the short term, profits, you have a lot of risks there. And then when you're taking on both sides, a lot more risk on both sides of it, financial and the actual asset. I mean, you're taking on a lot just to make a little. I feel like so
Right.
kind of hard to kind of fit into that model, but at this time. But banks as well, banks when you go to get the lending, I'm really, what's the word I guess I could say is it's hard for me to say I guess, but the when you go to like a bank side of things, like right now for like interest rates, rental interest rates. People are scared, right? Interest rates are high. Interest rates are high. Well, it's all about the acquisition at the end of the day, right? When you're looking at that, so really structuring the deal, and if I can still fit that same yield in there, that 10% to 12% gross yield, with the same interest rate, well, then it's still the same numbers at the end of the day, right? So it's all about the acquisition, I think, when it comes down to, using these bank loans and private money loans, is how good you can get that acquisition, right? And so that's what we try to do our best on and focus on a lot, is just getting those acquisitions at the best number possible. That way the investor has no risk, there's going to be money made. So.
Absolutely. And, when it comes to rates, especially with the banks and whatnot, obviously it's more of a residential real estate term, but you always hear, marry the property or date the rate, because you can always refinance and whatnot. It's kind of a funny little saying, but it's so true. And I really think that, purchasing high quality investments, even if you have to necessarily kind of pay a premium for them today, eventually will be, worth it in the long run. But, and that's another thing that I believe that is kind of something that your industry runs into is, with the banks, that's all good and well, you'll get the lending. Obviously there's a lot more paperwork, a lot more, credit checks, so on and so forth. But the private lending is a little bit easier to get into, but you typically pay a little bit more of an interest rate back to those investors. Is that something that you found to be pretty, accurate and consistent, or maybe it just kind of depends on the negotiations with those private lenders, or, what is something that you've seen?
No, it's very accurate for sure. The private money, you're going to just get a little bit more higher interest rate, more of like a 10 to 12% interest rate, as well as paying points throughout those draws, right? So you're going to definitely be paying a lot more interest, and losing some money on the deal. However, if you're still going to go into that deal, and still profit, your margin, at the end of the day, like I said, the margin is really everything for everybody. So if you acquired that property right, and you're still making the same margin with these higher interest rates, right? Those points, paying the draws, you're still going to be in the green. So definitely something that's keeping people on the sidelines, I'd say right now, is the scare, I guess, of the cost of capital. But like I said, at the end of the day, I feel like it's just really big, really, really big on the acquisition. So.
Yeah, absolutely. It kind of goes back to what we're saying. If the property and the investment's worth it, then it's worth the risk and the cost, if you will. But since we're already talking about interest rates, it's kind of a perfect segue to my next question. What are your analytics? What are your back office people saying about the future of interest rates? Obviously, there's been some indications that we might start going down 2024 at the earliest, maybe third or fourth quarter, probably closer to fourth, but maybe 2025. What do you think your effects of the interest rates are going to be, and where do you kind of see them going in the future? If you could make an educated guess, if you will.
Yeah, everybody likes to say the election, kind of always, the interest rates drop, or stuff like that, which we're not really seeing at this point in time. So, man, I'm honestly kind of a 50-50 for both sides, right? Hope to obviously see the rate drop, obviously. That's going to help everybody. However, wouldn't be surprised if it does go up a little bit more. The 6% is pretty much the nation's average interest rate. If you look back in history. So, I think we got really spoiled on these 3% interest rates. However, if you look at back in those times when we had that 3% interest rate, the housing market, was out the roof, right? But these prices for the houses were going up as well. So I think it all just balances out. At the end of the day, it's all about running the numbers, right? If you're kind of back onto the same with like the acquisition side of things, if you're acquiring these properties with those same interest rates, right, you're still making the same margin, you're still making the money, right? Obviously, if you have that 3% interest rate, it's going to be a lot more, lucrative. But however, if you gotta do what we gotta do and just keep bobbing and weaving, like I said.
I'm so glad that you mentioned that, because if you look at it historically, we do have, about the average interest rate that we've seen. I remember I was talking to a guy who had done extremely well in real estate. He was an older gentleman, made a lot of his money really starting out in real estate, maybe the 80s and 90s. I want to say like the first real estate investment he ever got into was in the high teens for an interest rate, and he still made it work. And so it's something like you said that our perception, especially of the younger generation, when we're seeing, everyone locked in at those 3% interest rates a little while ago, because obviously it's doubled, about or at least almost, twice as much as it was not too long ago. So our perception's a little thrown off there, but I think it's something that hopefully will come down soon. I think inflation is getting a little bit more controlled. Powell and everybody with the Fed makes it seem like we'll be able to tick down a little bit. The U.S. 10-year Treasury note kind of reflects that as well. But like you said, with everything going on in the geopolitical world, the election coming up, all the debt, it's going to be really interesting to see how we really react to the economy and the stimulus and everything that's been going on. So some people, I've seen some economists, and yeah, it's probably a little bit more of a drastic, outlook on the housing market and everything going on right now. But you do see kind of the route of inflation. You do see the impact of some of these interest rates on buying homes, and it just doesn't seem necessarily like maybe the wages are kept keeping up with the rate of inflation and whatnot. Do you think we might be on a mini 2008 bubble, where maybe we'll see a reset specifically in the housing market with some price drops and a little bit of, as we approach maybe that bubble, just to see maybe a small reset? Do you maybe see that coming on, or what are y'all's analytics and team saying about that?
Yeah, no, that's a great question right there. I think the main focus really on that side of the things is obviously definitely seeing the changes, I guess you could say, within the market, right?
Yeah,
Like you said, everybody used to have, a lot more cash than they used to, right? With the inflation going out the roof right now. Not the same, not the same aspect that it was, a couple years back. But I think what we're really going to start seeing a lot more now, and our whole team is kind of on the same kind of basis of it, is the rental market, right? The rental market is
yes,
going to be huge, very, very big. And so we love to say within the build to rent community spaces, being that reason, right? You have all these people, they can't even hardly afford a house now, the wages that they're getting. So they're going to need a nice place to rent, right? A lot of people don't want to live in these apartments and stuff like that. So going to see a really big peak, I think, in that rental market. And I don't know if we're even going through like a mini crisis, you could say, or a reset. I think it might be a longer term, process, that might just kind of like shift, the whole market, So
yeah, absolutely, and that's definitely kind of what I've noticed just in my small observations of talking to people and meeting with clients, building out financial plans for people, seeing what people's goals are, and also dealing with a lot of people who do real estate investments. It seems like it's a really big renters market. A lot of people are like, "Hey, I'm saving up a little bit more because and plus the interest rates are a little bit higher, so maybe they want a little bit more of a down payment to knock down that monthly bill that they can pay every single month for their mortgage and whatnot." But I think even a lovely place like San Angelo, Texas, is about 99% rented out. Like there's, it's totally, occupied. There's really not a lot of vacancies or anything like that. I'm sure that's something that you see down in Houston, and everywhere in between. It seems like Texas has really been a place for a lot of inflow of people to move. It seems like a lot of out of state people have moved here, a lot of wonderful jobs coming on. But kind of like you said, it seems like a lot of people, especially in the younger generation, are having to rent maybe a little bit longer than they'd like to, maybe waiting for favorable rates, but also maybe waiting for their wages to catch up. So
100%. And then I like to always look at it kind of like on a bigger spectrum as well. So like someone told me this a while back, actually, one of my investors, he mentioned, kind of talked about the same kind of crisis, if we were reset, what he thought about the market and stuff. Very educated guy. And he brought up the Starbucks stock and said, when Starbucks, is going down, that tells you a lot that nobody wants to pay for that $5 coffee.
yes,
And so put that in a very big perspective for me, actually, when he said that. And so from there, it's just kind of, I guess if we're not wanting to spend that $5 coffee every morning, it kind of shows us a lot of, I guess, what the markets actually is, right? So I feel like people,
so
one sector of it, oh, the interest rate sector, the housing market's down, or this, right? And so I think when you look at it on a big spectrum, you can kind of see it all like kind of right in front of your face in a way.
and you want to know what's hilarious? So what that really goes back to what we were just talking about. It's that third dollar.
Yep. Yep.
You can't spend the money on what you want. And I actually was reading a report that said something similar. It wasn't they weren't talking about Starbucks coffee, but they were talking about like cosmetic goods. Like when you see the price of like t-shirt clothings go down, makeup for women, pretty much all the things that are not necessities, everything that's extra. And that Starbucks coffee, even though it is good, and some days I might need it to get through a day of work, it
I'm
definitely is
guilty.
not.
I'm guilty.
Yeah, definitely not a necessity. I'll just use a pod or drink some regular coffee just here at the house. But no, I think you're 100% right, and I just think it's such a wonderful circling back to the Damon John thing that we just talked about, the $3 method, and it's like people are only able to do the first and $2 method. That $3, they're not able to really throw that money at those kind of really expendable goods or goods that are not necessities. So I would totally agree, and that's why people's wallets are maybe a little bit tighter than they have been in previous years.
100%, 100%. Which hopefully, with like you said, the inflation going down, hopefully we get some changes, within the GOP. So just
Yeah,
looking for the best.
yeah, it definitely seems like it's becoming more under control just off some of the analytics and the financial reporting that I've seen, and just keeping up with my market updates and constantly trying to stay, as educated as possible in these really unfamiliar times. COVID obviously that was a few years ago now, but that was unprecedented. What are the long lasting effects of that on the economy? Everything going on in with Gaza, Palestine, Israel, it's we're living in really interesting times. We have a presidential debate where they're talking about their golf handicaps. So it's really quite interesting that everything that's going into our economy, and a lot of people have a hard time understanding that because everyone goes back to, oh, our economy's bad, our economy's bad. Why is the stock market doing so good? And it's really important for people to understand that even though there is overlap and there is some correlation, that they're not perfectly correlated. So our
Exactly.
economy definitely, and I think it's something that the stock market will probably catch up to. We're still doing really good, but the same players who make up the entire American economy are not necessarily the same people investing in the stock market. Actually, the stock market makes up a small portion of people in the American economy. But that was something we talked about on our previous podcast. Obviously, we all have Instagram, we all have social media, and you being real estate, I know you see it all the time. What is your take on real estate gurus similar to people like Grant Cardone? Like, what is your take on that kind of situation and those people who you see all over social media?
Yeah. Mixed feelings, I guess you could say.
Sure. Yeah.
I think, like Grant Cardone and them, very, very valuable information. I'd lie to you if I said I've never watched any of his videos and like to get some
Yeah.
content or get some, information, right? I think, like you said, education is kind of everything in this game, especially with the investment route, right? That you definitely can relate with, I'm sure, as well. And definitely has a lot of good content, you're right? Information. However, I think that a lot of it's, kind of towards a different kind of style of client, right? Looking for kind of like the low hanging fruit people. So I feel like definitely take the information from those people like that, but definitely look hard into it, before like investing money into people, that are sitting there on Instagram every day just trying to tell you why to invest with them.
Yeah. And I mean, I definitely agree. And it's like you got to understand the average person has to understand, okay, how does this person get views? And a lot of times it's by saying kind of extreme statements. But
Exactly.
I do agree with Grant Cardone. He's in a lot of sense, like not all debt is bad debt, and that's something that Robert Kawasaki says a lot. I think I said his last name right, but
Yeah.
Rich Dad Poor Dad guy. Um, and not all debt is bad debt. It's really how you use that debt. Like if you're using debt to go buy an investment property, like you said, acquiring something, and maybe it's a little bit higher interest rate than you'd like, but or if you're buying debt to go buy shoes and things that aren't looked as an investment or anything that's going to help you out in the future, like there's obviously a difference there.
Exactly.
And kind of similar to how maybe you Grant Cardone, it's like you can make the same argument of Dave Ramsey. So like people will have really good takes, and then they'll have really good information advice, but sometimes it's not always applicable to every person's situation. I don't believe that there's a one size fits all recommendation or piece of advice for somebody, whether it's investment or whether it's just life as a whole. So I agree. I think there's some good lessons from guys like Grant Cardone, but sometimes take with what they say with a grain of salt, because obviously understand the incentive and what they're trying to do. They're trying to get more clicks and followers and likes. So they say sometimes some things that are maybe a little bit extreme, like Grant Cardone, he's really big on not having any cash. Like, and I get that you want to leverage almost every penny, because that's kind of what he seems like he's really big on doing. And from the videos that I've seen, at least, is leveraging every penny to in real estate investments and make more money. And I get that, because cash just sitting in a checking account is losing money if you consider inflation. I totally understand that, but I do think there has to be some kind of liquid asset available to the average individual for emergency savings. Okay,
100%.
something happened, you kind of need some money, and just it gives you that safety net to maybe be a little bit more aggressive with other investments and so on and so forth.
Exactly. No,
Yeah,
very well said on your part, man, for sure. And like, kind of pick off that, is like, your Grant Cardones and stuff, they're going to tell you to spend all your cash, right? All your cash, but who are
yeah,
they going to tell you to come spend it with? Them, right? And so
yeah,
I think,
true.
like you said, just kind of looking into, the bigger picture of the people, and really getting to know who you're really getting the information from is
Yes.
probably the biggest part if you're going to be like, on these gurus and stuff like that on Instagram.
Yeah, that's it. Yeah, and if they're selling an investment guide, then yeah, that probably tells you a lot of where they want your money to go. So yeah,
Yeah.
that's hilarious. Yeah, that's a great point. We're kind of coming up on this 30-minute mark, so really going to have like one more question for you, and I'm sure I'll have a lot of questions as we kind of go through answering it. But what are some of your future goals or some of your future projects that you're really looking forward to, or maybe something that you think would be ideal for your situation, your career, or maybe just something that you're working on right now that you're really excited about and want to share with people that you're doing or developing?
Yeah. So, future goals, SmartVest. We just kind of started up with SmartVest,
Yeah,
basically a real estate investment firm, right? So we're going to try to just really nail down on the acquisitions. Like I said, man, really nail down on the acquisition side, from land, multifamilies, and single families, of course. Um, really ramp up on that side. Try to bring in, kind of down the road, institutional type model to that. And so definitely the big goal there. But definitely excited for a lot of projects we have going on right now as well. Working on like 2 spec homes here in Spring Branch. Very high, very, very nice area here in Houston, upcoming. And then 35 acres currently in Mansfield in Dallas area, for a BTR community with one of our institutional clients. So very excited for both of those right there. Construction jobs, ground up. So those are always exciting for sure.
yeah, 35 acres in the Mansfield area. That's definitely going to be a big project. That's going to be awesome, and
Most
you
definitely.
guys are building it from the ground up. So I mean, I kind of mentioned that at the beginning, like how cool is it to create something and kind of see it grow? It almost becomes kind of like your baby, I would imagine. So I
Yeah.
think that's fantastic. What
Yeah, it's fun.
what
It's definitely fun.
what kind of property are y'all going to build on that again? On that 35-acre Mansfield property?
So the 35 acres is going to be a BTR community.
Oh, okay,
Obviously, we're
yeah,
still waiting for the permitting department up in Mansfield to kind of give us the okay. But as of now, it looks like it's going to be in the green. So basically, BTR, so build to rent community. So that's going to
yeah,
be more density size. So you like those smaller square footage homes and as many as we can fit on there.
yeah, no, yeah, absolutely. And that's something that I think that you guys have to deal with all the time. Is probably kills a lot of deals for a lot of people. I know I've heard of it. Is dealing with the cities, dealing with all the different permits and everything that goes into it, what you can get approved for to build. And I mean, I guess it kind of goes back to who you know, but also what the value you bring into the city and the community. But do you sit in on a lot of those deals, or do you go talk to the city yourself, or?
100%. That's definitely probably the one of the biggest hurdles, I'd say, especially right now in Houston. I think we're looking on like a 5 to 6 month waiting period. So from the time of the time of signing the contract, right, getting the acquisition side lined up, you're looking at about a 6-month window before you're approved to actually start going vertical on that land. So you
Wow.
got to calculate all your holding costs, right, and stuff like that as well. So for us, big time right now when you're talking about the cities and stuff. Like I said, I always go back to the acquisition, most important part of any deal, because for us is like structuring the deal correctly for our investors, right? So for us, if we can go get this piece of land and make it contingent upon the replat, or contingent upon permitting approved to close on that, well, now I don't have to hold this property for the 6-month waiting period, right? Have all these holding costs built into my margin, take away my money. So structuring the deal is really big for us right now, and that's like something that we're really, really focused on when it comes to the construction side of things.
Yeah, that totally makes sense. Because I always wondered, I'm like, is that something that you go negotiate before you buy the land? Can it work like that? Because maybe you get the permit okay to do that, and the current owner says, you know what, since we have the permit, we'll just, or at least we have the clearance from the city, we'll go ahead and not sell and build. So yeah, I guess it all comes down to pretty much how that deal is structured, and really how it's written up in a lawful and legal way. Wow, that's pretty cool.
Yeah, definitely. It's definitely the biggest thing I could say. Definitely doesn't happen all the time, but when you can get it done, definitely negotiation for that is biggest for us right now.
Yeah, I'm sure that's something that you've had to learn a lot. Is just
Definitely.
negotiating, and I'm sure that you might have to, appease two different ends as far as, well, I guess if you're doing it for yourself, but definitely the investors and then whoever you're acquiring the property from, it definitely, I can see how sometimes that would be difficult, and you definitely have to get creative with different ways how you structure it and whatnot.
Yeah, very. I like to always say it's like connecting the two dots, right? So
Yeah,
you got to figure out what one person's needs are, and then figure out what your investors' needs are, and figure out the way to get it done. Which I think is
yeah,
honestly my favorite part about the negotiations is because it's making it happen. So, which I like to do.
yeah.
So,
And if only it was a straight line all the time, I feel like
yeah,
you'd have lots of zigzags
yeah,
and turns, and yeah,
yep.
yeah. Well, man, we're at that 30-minute mark. Taylor, I appreciate all the knowledge that you shared with us today. When it comes to building wealth, I think it's really important for the presence of the podcast, not just to talk about investments or financial planning, but I mean, what 90% of millionaires made their money in real estate. So it would just be silly of me not to reach out to people who've done well in real estate and do real estate investments like yourself. And I think it's kind of a really quick, not necessarily quick, I shouldn't say quick, but it's a rather simple concept for people to make a lot of money. And of course, now you get to the sophisticated and the technical aspects of it with the real estate development, building these BTR communities and these large scale communities. But the average person, that the biggest purchase that they're ever going to make in their life, the average person speaking, will be their home, be their primary home, which obviously is real estate. So I think it's really important to talk about real estate and the effects it has on wealth and generational wealth, like we all defined earlier, specifically you defined earlier. So I really appreciate all the knowledge that you shared. Thoroughly enjoyed having you on, and we'll have to have you on sometime soon.
Awesome. Well, I appreciate you having me, brother.
Yes, sir. Thanks a lot. I'm going to come see some of these properties soon. I'm telling you, I'm going to post about them and give you some good marketing for
Let's
a
do it,
small
brother.
fee, of course. For a small fee. No, just
Of
play.
course, brother. We love to play ball here.
Yes, sir. Yeah. Well, y'all stay safe in Houston. Prayers up out to the city. I know you guys are dealing with so much, and hope
Appreciate
you
that.
get your electricity and everything turned back on.
I appreciate that, brother.
All right, Taylor. Thank you, sir. Appreciate you.
Alrighty, Eli. Appreciate it, man.